Hello, I'm Anastasia Amoroso, and this is Beyond 60/40. On this show, we do a deep dive into the alternative investment space, share industry leader insights, and discuss the latest innovations in technology. In today's Market Pulse Snapshot, I'll share the one thing that caught my attention this week in private markets. Next, iCapital co-founder Nick Veronis talks about the proliferation of evergreen funds with Rob Collins of Partners Group. Then iCapital Managing Director and Head of Alternative Investments Distribution, James Costabile, gives us a 360-degree view of how he and his team partner with our RIA clients to help them access alternatives. Let's get to it. In today's Market Pulse Snapshot, the one thing I'm focused on is the rapid growth in the alternatives asset class, especially in the private wealth channel. The growth in alternatives continues to gain momentum, and the size of assets under management in this asset class is growing relative to the traditional investment options like mutual funds and ETFs, which have seen their assets under management stagnate. The alts industry AUM in the meantime nearly doubled over the last 5 years from $8.9 trillion in AUM in 2018 to $16.2 trillion in AUM today. And the future projections indicate that the overall assets under management is set to climb another 50% through 2028 to $24.5 trillion, led by private credit and venture capital. So what's driving this enthusiasm about the alternatives allocations? Well, for starters, alternatives have consistently delivered strong returns for investors. Whether you're looking at buyout strategies or venture or direct lending or any other alternative strategy, alts have outperformed the traditional global 60/40 portfolio over the prior 3, 5, and 10-year time horizons, and have done so with better risk-adjusted metrics. But it's not just about historical returns. The forward-looking returns are also expected to continue to outpace the public markets. For example, according to JP Morgan Asset Management Capital Market Assumptions, private equity returns could deliver on average a 9.7% annualized return over the next 10 to 15 years compared to 7% for U.S. equities. And private credit is expected to return 8.5% annualized versus 5.1% for U.S. aggregate bond market over the same time period. Now, the prospect for these returns, it's what's attracting not just the big institutional investors, but is also catching the attention of the private wealth investors. And private wealth investors collectively hold $140 to $150 trillion in wealth, which is, by the way, roughly the same as $135 to $145 trillion or so held by institutions. Now, of course, the private wealth allocation to alternatives have been low, but have been rising, and they're still expected to grow over 200% from $4 trillion today to $13 trillion by 2032. So what's driving this growth and also within the private wealth? Well, in my opinion, it's the fact that the alts industry collectively is keenly focused on making the asset class more accessible to private wealth investors through improved access and technology, better education, and, of course, innovative products like evergreen funds, perpetual structures, and registered product. Indeed, we've seen a proliferation in open-ended structures. And these product innovations, together with the potential for higher returns, increased diversification, and reduced volatility, should continue to make alternatives not just a nice to have, but a need to have in portfolio allocations. And that's your one thing in private markets this week.
Our first guest today is Rob Collins. Rob is head of U.S. Private Wealth and a member of the Global Executive Board at Partners Group. Founded in 1996, Partners Group has $142 billion in AUM, and it's been a trailblazer in private equity evergreen registered funds. Rob has spent the majority of his career in alternatives, and for the past 19 years has been a leading contributor to the growth of the Partners Group's America's business. Welcome, Rob, and thanks for coming on the show.
Great to be here, Nick.
So let's start with a really basic question. What is a registered fund focused on private equity? How does it work and why does it exist?
Yeah, as the name says, they're registered with the SEC, typically the Investment Company Act of 1940 or the 33 Act. So they are, in essence, like mutual funds. You're able to get invested, stay invested efficiently. So 50,000 minimums or even 25,000 minimums, 1099s instead of delayed K1s, broad regulatory eligibility, sometimes accredited and qualified client, typically some liquidity mechanism, typically quarterly. So there are two basic categories: interval funds, tender offer funds, but they exist to provide access in a simple, efficient, effective way that didn't exist before with traditional drawdown funds. So that's what a registered fund is. An evergreen fund is what they're commonly known as. Sometimes people call them semi-liquid funds, but a simple, elegant, effective solution to get access to private capital.
So when you think about like private equity historically has only really been directly accessible to the qualified purchaser marketplace. So those are individuals with 5 million investable assets, excluding their primary residence. There's roughly 2 million QP households in the US out of 130 plus million. The registered funds allow the 12 million accredited investors who aren't QPs, and I think it's roughly a $24 trillion market, access directly into private equity. You don't have the complexities of a J curve, so no capital calls, distributions. Money goes in the ground. Day one is working for the investors. So Partners Group was a pioneer, probably the pioneer, in offering private equity through registered fund format. So talk a little bit about the history and how that occurred.
It's kind of a funny story, Nick. Really two catalysts. One was my dad. My dad used to work for the city of New York. He has a pension plan of the city of New York. And when I joined Partners Group, he said, "Rob, I want to have access to private equity because the private equity part of the pension plan has been the best performing part of the plan." And I said, "Dad, sorry, but these funds have a 10 million minimum. They have capital calls. They have delayed K1s, J curves. Like, this is not for you." But I knew there's that demand, from the individual investor. Around the same time, we had an RIA in Seattle called Filament, and they said, "Look, we understand alternatives. We invest in hedge funds. For some of our clients, we invest in private equity. But for many, we haven't been able to build that allocation to private equity because of the challenges with those traditional funds. We need something that is always available, that is fully invested, that is broadly available, easy, effective for us as advisors and our investors who are individual investors." 2009, we finally launched our fund. And we're able to do that because we're just built a little bit differently. So we had the right ingredients. We buy companies, we do co-investments with other managers, we do direct lending, secondaries, primaries, all in one firm. And then we had the right organizational setup to deliver this pro rata. So all of that investment content thoughtfully constructed. That's what we're all about at Partners Group, developing a solution.
And so your success has clearly inspired others. So if you look at the broad, sometimes they're referred to as gatekeepers, consultants, fund-to-fund players, but they really concentrate on secondaries and syndicated co-investments. Almost every one is now in the market with a 40 Act tender offer fund. I think there's maybe a couple exceptions. So the market has seen, just in the last few years, sometimes we refer to this as 2.0, the acceleration of just seeing these high quality products, typically delivering what one might refer to as more of an index play into private equity. So in some cases, very high quality private equity beta. Talk a little bit about the landscape today, and what do you think sort of driving or propelling this growth?
Yeah, there's certainly been a product proliferation. So everyone's trying to develop solutions for the landscape, and there are differences. Every firm's different in terms of their investment capabilities, in terms of how they're organized as firms. And some, to your point, much more diversified, maybe more passively built, taking what is available in the marketplace. Other strategies more concentrated, maybe more GP-focused risk in those portfolios. So there are different approaches, many different ways to skin a cat.
To your point, we've seen some of the major private equity firms, and I think a lot of people maybe aren't aware of the fact that the SEC prohibits private equity firms, and there's 5,000 private equity firms globally, from creating and managing top to bottom their own registered fund. They require an independent advisor, and they do that to prevent self-dealing. But yet we've seen the big players, because these obviously, again, mature industry firms with, in some cases, hundreds of billions of dollars, one case approaching $1 trillion, but this is an important market to them, and they're not going to sit on the sidelines. So they figured out different ways of coming in. And in some cases, they're evergreen funds that might be restricted to qualified purchasers. In others, in the case of KKR, they've done something very innovative with this kind of conglomerate, almost Berkshire Hathaway-like structure, where they are going to the accredited investor. So talk about the bigger players coming in and launching products, because one of the things that we've seen as the competition has really intensified, we've seen price compression, we've seen more institutional style fees in the marketplace, and education.
Sure, it's been a great thing to have more competition. I mean, you need competition to grow a market.
And one of the things that we're doing at iCapital is we're serving as the independent advisor. And that's really becoming an access point for some GPs who want to reach this marketplace, but can't do it on their own. So we have one fund, the iDirect Private Markets Fund, features KKR, Vista Equity Partners, and Warburg Pincus. So you've got sort of upper end of the middle market, you've got growth equity, upper end and sort of large cap deals, growth equity, and B2B enterprise software, which we think is kind of a trifecta. So we're seeing the market evolve. Talk a little bit about what it's going to take as we go from 1.0 into 2.0 to get more widespread adoption.
I think education gets to the single most important reason why this is a topic. And we get asked frequently, why are we talking about this? Why is this important? And the reason why it's important is because there has been this profound shift, public markets to private markets. More and more of the economy is found in private markets, private companies. The management teams that we work with, the entrepreneurs, they don't want to go public unless they have to. So there are these terrific companies with proverbial moats, as Mr. Munger and Mr. Buffett would write about, that are in the private markets, and you can't find them in the public markets. So this is why it's important, and this is part of the education piece, to explain to advisors and end investors why it's important to have a portion of the portfolio invested in this part of the equity market. So I think that education piece is critically important. I think iCapital's done an amazing job in enabling many of those conversations, informing that advisor to build that thoughtfully constructed portfolio of different funds. That needs to happen. So I think the industry needs to continue that journey in providing that education in order for these portfolios to be built correctly.
Well, thank you, Rob. Thank you for coming in, sharing your expertise, providing these insights. We greatly appreciate it.
Great to be here, Nick. Thank you.
Today, in our Spotlight segment, we're focusing on how iCapital partners with RIA clients to help them grow their business and access alternatives. And joining me for that discussion is iCapital Head of Alternative Investment Distribution, James Costabile. James, thanks for coming by today.
It's really great to be on the show. Thank you for having me.
It's good to see you. So let's get to it. Tell me about your role at iCapital. What does the Head of Alternative Distribution mean, and what are you and your team focused on?
Yeah, we spend 100% of our time with independent broker-dealers and RIAs. And in that journey, right, we're educating them on the merits of alternative investments across private equity, private credit, real assets, and hedge funds. We're working with them to understand their practice. People understanding an asset class is very different than understanding the nuances of the product, so we spend a lot of our time on product education. And we want to make sure that the experience that an advisor has when they're doing business with iCapital is a great one.
You know, I hear this a lot, that a lot of people are focused on education and they're focused on that RIA channel, but what are the keys to success, to your success in advising RIA clients on alternatives?
We spend a lot of our time understanding how the advisor is thinking about alts, what their past experience was around alternative investments. Was it good? Was it bad? Were there asset classes that they had a negative experience with, just to try to educate them on maybe it's worth giving it another shot? And so much of it is really about understanding kind of perspective, understanding the client base, right? So what we often find in alternative investments is that clients have made their money in private businesses and they identify with private equity, maybe more so than they identify with traditional equity. Mm-hmm. So it's like really understanding that practice, being objective, and hopefully being a trusted partner.
Right. So let's do a little role play.
Yeah.
I'm an RIA client now, so I come to you, and why should I work with iCapital when it comes to alternatives? Because there are a few other options.
iCapital has been servicing registered investment advisors more than 10 years. So we've done it a really, really long time. We've been really, really good at it. I think what differentiates iCapital is it's not just the technology, right, of implementation, but it's the asset allocation tools, right, through Architect. How do you take a portfolio, right, of stocks and bonds and then begin to integrate alternative investments into that practice. But given the limited track record of alternative investments, in some cases, show the client a snapshot of how it would have performed when there was a financial crisis or there was a liquidity squeeze in the market. Our Architect tool allows people to do that in a way that other tools in the market don't, that are using largely index returns relative to individual manager returns. Our ability to allow a financial advisor to customize their thoughts in a custom offering, a fund, where they pick and choose the managers that they want to include in it, and iCapital manages that portfolio administratively for them. And we work with more than 350 general partners in the space, so access to high quality talent isn't an issue, and we make that available through our marketplace, which I'm sure we'll talk about at some point later.
Right. So you mentioned Architect, which is one of the differentiated tools in the marketplace. Any other ones that you would mention that advisors can access elsewhere but iCapital?
AI Insight in particular is another tool. It's not just the asset class that I mentioned before, it's the product level education. And for those RIAs that are out now acquiring other RIAs, now all of a sudden they went from being a small business to a much bigger business, and they need scale and need to demonstrate in many cases to the regulators that they actually have adequately trained their teams. And so AI Insight, right, which is one of our businesses, helps people at an asset class level, at a product level, but it becomes very important, I think, when you're ensuring that there's adequate compliance and controls in that channel.
So I'm still that same advisor. I'm now convinced that I need alternatives. I can come to iCapital for the technology education and support. Where and how can I access alternatives within iCapital?
We launched our flagship marketplace earlier in the year, and it has more than 150 different offerings. That number will continue to grow. And what it really does is it makes it really easy for an RIA to come to our website where they have full technology, which is implementation, all of the materials in a single place, the ability to fully transact, on that, what we call our tile. That tile has within it our research and due diligence report to the extent that we've actually followed that manager. It actually has all of the underlying materials from the manager that are there. We also are we have chat features right inside of our technology that allow us to effectively IM with the GPs themselves to ask questions, as well as our individual sales team. So I think the technology is in marketplace is continuing to get better and more robust, and the offering itself I think will only continue to grow. And so for advisors that want to have all of their information in one place and apply that client profile to multiple offerings to create scale in their business, it's really going to be, I think, really interesting. I would say something that we're going to be launching later in the year is really around our model portfolios, which we think is particularly exciting.
So technology is important, product access is important, model portfolio is important, but so is support, just investor support. So tell us, what is the sales support, the investor support model that we have for our RIA clients?
We have great partnerships with our GPs, right? Because they're the ones that at the end of the day are going to be the product experts. We have a research team that's probably one of the largest out in the marketplace that is willing to get on the phone and speak to our RIA clients about the various products that they've actually covered. We have a sales team of 30, right, when you include our internal desk and our national accounts team. And on top of that, we have a large investor relations team that walks through the sub-doc completion process, the registration process, and how to actually do business with iCapital. There are very few organizations that have that level of scale. So we're very excited about our existing RIAs, but look forward to doing business with more new ones as well.
James, thank you. Thank you so much for joining us and for shining the light on how iCapital partners with our RIA clients and truly offers a comprehensive one-stop solution for all of their alternative needs. Thank you. And please don't forget, we're also taking your questions, so send them to us at yourquestion@icapitalnetwork.com. I'm Anastasia Amoroso, and thank you for joining us today. We'll see you next time on Beyond 60/40.